differentiate themselves and do whatever it takes to compete with a lot more visibility that's coming in from the different banks. Some of the other things that you are already talking about in Vietnam as well are the fact that customers are becoming very much more demanding. The reason for that is there are a lot more choices in banks as well as in products that are available. So banks are offering a lot of competitive products to stay competitive, and customers are choosing to be demanding and asking for a lot more. So banks need to be innovative and find new ways to continue to keep their customers, and this is probably one of the biggest things that banks are facing today. The other thing is the competitive pressures from within in a country itself. You find banks emerging, you find that banks are continuing to grow, and as they do that, every single bank needs to look at what do they need to do to compete with the size as well as the new products that are coming out. So competition is increasing with mergers and acquisitions, and increased regulations are causing a lot of pressures on banks as well. You've seen that here. There are Sarbanes-Oxley, there is Basel II. All of those are regulations that banks are grappling with worldwide. Plus, there are local regulations as well. And these are really good things that are happening because it makes your customer feel very confident in your bank. But at the same time, you need to really look at how you can implement these within the tight guidelines that are often put in place. So with all that, I think this is a global view. This is a view of how Vietnam is going to be looking at modernizing as well and enhancing their competitive advantage. So let's take a look at some very practical things that banks are doing as they're continuing to grow and be competitive. So if you look at the first key thing that a bank must do, the most important thing that you need to look at are your customers. This is not just a banking statement, it's a statement of every industry. Customer is king, is a statement that you hear many times. So what are some of the things you can do with customers? And I'll tell you a few examples as well as some insightful things that banks have done. The first key most thing you need to do is work with building relationships with your customers. Some innovative things are happening worldwide. One of the things I find very interesting and innovative is a story I heard from a bank a few months ago when I visited them. They actually implemented RFID in their branches. And on each ATM, they put a chip on there. So when a customer walks into the bank, basically the RFID methodology picks up the fact that the customer has walked in. And if the customer is a key customer, a bank manager gets notified, and they immediately come out and greet them with their name and personalized information. So immediately, there is that bond and trust built. So that was something I thought that was very innovative that this bank had done. A couple of other things that banks are doing is mainly growing loyalty within customers. They do that by giving them innovative products and exciting things that basically wants them to stay with the bank. Rewarding good customers with offers, and so you tend to call up a customer who has been a good long-term loyal customer and give them certain offers and make sure that they feel that they're being rewarded for staying with the bank for a long time. The other key thing is acquiring customers. There are about 2 billion people around the world that are not banking today, and that is a huge number that you can tap into. And Vietnam has a large number of these unbanked people as well. So going after that is a key thing. And in South Africa, as an example, they're doing a lot of things like microloans and e-banking, where it's starting to make banks get the masses coming to them, and ultimately you grow your customers. Another area that you absolutely need to focus on is preventing the loss of a customer. I put this last on the bullet list here with customers, but this is the key thing you need to watch for, because losing a customer is much more expensive than anything else you can potentially have a loss from. So keeping customers is important. Some innovative things banks are doing to do that. One interesting one is they're putting monitoring systems in place. So they're watching patterns, like when somebody comes to the ATM and withdraws money in a certain pattern, they're able to detect that somebody may be at risk for leaving the bank, And again, it's up to the management of the bank to watch the tellers, they watch, and they're able to proactively do what it takes to get these customers to stay with them. So these are some key things. There's a lot more, but of course, this is probably the key things that are repeatable patterns that I have noticed. That helps you grow your revenue. Now, you also need to look at the cost side. And for cost, growing your efficiency and looking at things that can help you be more efficient is probably the best thing that you could do. And just to highlight a few things that would make sense for the Vietnam market at this time, implementing SOA. I know SOA is a much talked about methodology and technology here in Vietnam already. And it would be very worthwhile to look at how you can implement this so that you can remove redundant processes in your systems. That is a huge factor in reducing cost. Modernizing applications is also a key area that banks are looking at. And we're working with several banks in Vietnam already, and it's interesting. Every bank is looking at, do I keep my current application and modify it, or should I look at packages? And this is a constant tussle, so you need advisement, and you need to really do this carefully because this is what's going to take you into the 21st century. Implementing new channels is also something that is really a mandate for most banks, and you have to look at mobile, ATM, integrating your ATMs, which is, I think, the next big thing that's happening in Vietnam. And in order to do this efficiently, you have to look at technologies like ESBs. You have to look at multi-channel integration and do it right so that the customer experience is uniform across the channels as well as it's efficient in the back end when you do the processing. Another very important thing that you need to look at is consolidating your customer and product data. And this is something that big banks are doing as a first step most of the time. The reason for doing this is because not only does it decrease your cost, because now you have to go against one set of data when you do access or when you do updates, but also it allows you to sell better to your customers. You can target sell, you can cross-sell, you can upsell, and it really gives you the single unified view that allows you to do a lot more for your customers and make them feel cared for. Very critical area to look at is risk management. Without doing risk management, no matter how much cost reduction you do and how much revenue you increase, you are at risk, and there is a problem that is looming in the front, and this has happened to a lot of banks recently. So risk management is something that needs to be focused on right away. Government regulations, everybody is absolutely doing this and implementing them because that is a mandate and there are dates involved. But that helps your customers feel the bank is secure and that you at least will be in business for many years to come. So absolutely needed, and I think this is something you automatically tend to do. But interesting things that banks are doing are things like enterprise risk management. This helps them with credit checks. It allows you to offer people a low balance when they're looking for a loan, so that if they're not a credit risk, you can offer them that kind of advantage. So enterprise risk management is something you absolutely should do. RFID, again, is something for security and validation. It's a modern technology that a lot of people are deploying, and it's very cool because you have thumb printing and nerve printing and all kinds of things, and so people tend to love walking into a bank and doing that kind of thing. So it's a neat way to do it. Implementing proactive account monitoring is probably something that most banks are doing now, and it's something that's really visible to customers. It makes you feel very good when a bank calls you and says, Mr. So-and-so, I heard that last night you spent a lot of money in Vietnam. For example, you went out to a big dinner, and they want to make sure that you were actually in Vietnam. And so it's very interesting when you get a call like that. I get that often as I'm traveling. They call me to make sure I was actually in a certain city so that they can verify that the expense was mine, and they can proactively detect fraud when it's happening. So you feel very secure when your bank does that for you. Now, these are some things that would be worth looking at as a first step. Let me share with you how some banks worldwide have actually done some of these things. Bank of Montreal is a bank that needed to put in a new teller system. And in order to do this, they had a lot of challenges because they had to integrate with their existing systems. So what they did was they used SOA to do that, and very successfully were able to improve customer satisfaction. Bank of America did what we just talked about. They consolidated all of their customer data. It was a fairly complex project, but once they did that, they were able to retain customers better and grow their revenues from existing customers. Wachovia is another huge bank. What they needed to do was support multiple delivery channels, and they also needed to scale to a large number of customers. So again, they used SOA, and they implemented a lot of new channels, and now they're able to support 4 million customers per channel, which is a huge number and a big jump for them. A very key example is Bank of China. This is the largest published benchmark worldwide to date. What they needed to do was project for scaling for large growth, and they needed to implement new systems that would scale. So they actually did a lot of research, fixed their architectures, and they have published a benchmark, which typically banks don't publish, but they can reach 380 million accounts and 3 billion transactions, which is a staggering number. So these are real examples, real customers who have actually completed projects, and these are examples we could go out and leverage. So the question becomes, how do you look at the transformation within your bank? All of the different pieces need to fit together, and you really need to look at a couple things. If you look at this picture left to right, on the left are things that you need to do to grow your revenues. So everything that has to do with consistent customer view, implementation of channels, and everything with ATMs, online banking, everything with mobile banking, all of that is what you need to do to pull customers towards you and keep them. So that increases your revenues. If you look at everything on the right, that is largely about efficiency and reducing your cost. So you need to look at interoperability, you need to look at architectures and things like that that really help you reduce your cost. So that is something, if you're looking at improving your efficiencies, that would be an area to start from. And in the middle is everything that pulls it all together. So it's basically around SOA, about removing redundancy, getting services that you can reuse, and based on doing things like this and architecture planning and things like that, a leading bank in Asia was able to create new services in days rather than in months or years. And this is a big thing for a bank, because when you want to be competitive, you want to roll out services as quickly as you can. And a US bank reduced $50 million in their maintenance costs by using SOA. So these are numbers you can actually quote, and it's pretty mind-boggling to see how small changes and implementations can do that for you. So to close, the benefits of modernization, we've covered that. The key here is, by 2010, the government of Vietnam has put a lot of interesting metrics in place, and a lot of very innovative things are going to be done within the country. In order to support that kind of growth, the banks also need to grow and scale and be able to be efficient. So there are things that need to be done in real time as quickly as possible. And I think in order to support the government's initiatives, the banks need to move as quickly as possible. So modernization is now. Modernization needs to be done now. And whatever it takes, banks need to support all of the growth that is to come. We're very excited to continue to be part of this and to watch the evolution of Vietnam and the banking industry. Thank you for listening, and thank you for being here.
Rồi, xin cảm ơn